The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here now to the Diagnostic Trading Hour right here on TFNN. You can listen to us online from anywhere in the world on TFNN.mobi. Let's go ahead and check it out right now. Let's see where the markets are located and where they're moving to. We got the S&P is currently up 6 points on the day. We have the Russell up 3.8. We got the NASDAQ up 11 points right now. The Dow's up 21. Oil is currently flat on the day, though it has not been flat. It's flat compared to yesterday's settlement. We'll look at that chart here in a moment with the inventory reports and sort of walk through, how that played out. Also, so we got that right there. Let's go ahead and look at natural gas. It is down about 1% on the day. We got corn down 7.5 points. That's a 1.5% drop on corn. Looking on over at soybeans, it's mildly flat compared to yesterday's settlement, down 2 points. Euro dollar currently down only 28 pips. Aussie dollar down 16. Pound dollar up 74 with the U.S. CAD up 42. And then looking over at the U.S. franc, it's up 10 pips. Euro yen up 38. Pound yen up $1.31. So it's the big mover right now. We got U.S. yen up 40 cents. Gold currently down 13 points on the day. Silver is down over 2.5%. Massive move on silver. Copper is currently down nearly 2% on the day, so pretty nice move in copper as well. And talked about that, whenever we have any certain reports that we have that can come out in the news can move copper. And a lot of people don't even think about copper. It's just not on their radar. But think about it. When you have a building permit report, okay, building permits here in the U.S., when you build houses, you're going to need copper for all the plumbing. And so it is basically a leading indicator of the demand for copper. And building permits came in less than expected. Therefore, less demand for copper. So copper drops. It just makes sense. Pretty simple. And like I said, it's just one of those things that people don't even think about. And it's just something I noticed over time as I'm scrolling through the different markets. And of course, copper can be a crazy thing to trade. It's fun. It moves. And when it moves fast. But you want to trade it with defined risk because it can move really fast and maybe a little too fast. So just keep that in mind when you are trading it. So where can you trade it with defined risk? Well, you can trade it over on Nadex. And so Nadex, gives you plenty of opportunities to trade. Now, copper actually had a pretty decent little move last night, but it really, solidified that this morning when the building permits came in at 8:30. And so you come in right here, and you can see right there at 8:30, and you got a little pop. So there's messing with everybody. I mean, it's a perfect stop out, messes everybody over, and it goes up even though building permits are negative. Probably shouldn't be buying into that one, right? So because less building permits means less houses being built, which means less copper in demand, and so. Sometimes the fundamentals take a moment. You got to follow. You don't follow the fundamentals. Just go short because, man, you'll get slammed, okay? But if I can get the fundamentals and the technicals to line up, and I'm not talking about long-term fundamentals. I'm talking about, right now fundamentals. If I can get those to line up, then that is awesome. So I wait for that short entry. I get a short entry. Boom. Goes down. Goes south. And, it drops one deviation perfectly. It goes up to that half deviation mark, comes right down to 1.5 deviations, and bounces right off of it. So I got a nice solid one deviation move. Time to take some profit. Move on to the next trade. So that is just something to think about with copper. And of course, we had a lot of things going on this morning. We went in this morning. We had the climate count change, the asset purchase facility votes, the bank rate came out of Britain. So that's sort of how we started the morning off. So I'll go ahead and we'll pull up pound dollar, pound yen. They had some big moves, and you can sort of see when that news came out, right? So right there at 4:30, and you see a move of over 100 pips. So massive move right there, and not a surprise move. And, this is one of those moves that, you love when they line up and all the different pieces come together because, we had so many things coming out at the same time on the pound and all the stats. And I go through and I pull those and I look at all of them and figure them out and look at, what might be a good trading opportunity on Nadex. Well, we had the meeting minutes, but we had 5 announcements. Like I said, we had climate count change, asset purchase facility votes, the bank rate, all coming out at once. And we also had the average earnings index, 3 month over year, and the pound unemployment rate, all at the same time. And so that's really a perfect straddle, or strangle setup. And you could have looked at the 5, 6, or 7. The move was so big, 5 a.m. would have been all you needed because of how far it moved. And when we look at that move, what I was looking for was really not a diff. I didn't even care what came out of any of those reports. Those are enough high impact reports. We should get a nice move, and we did. And so going in and looking at those, the move that I was expecting was about 80 pips. That's the average move, because the average move is 80 pips right there. And let's see, what else do we got? So we got the 80 pips, and then at 91% of the time, it moved 50 pips. I like that. And not only did it do that within 2 hours, it did that within like 2 seconds. So it moved very fast and really very difficult to trade it. Now, you could have done a pullback and you could have traded into it. But the best thing is just go in and straddle or strangle it. So if you can't find a straddle, go over and find a strangle. So you can usually find a strangle when you can't find a straddle. And I prefer straddles. I'll go there first, which means I'll go to the spread scanner first to see if I can find a good spread. But sometimes there's just not one lining up at the right point. There's been too much volatility overnight, whatever. Maybe the premium built in is just too high. And so there's just not a great opportunity where it's not really affording itself to, basically lend itself to a great setup for a trade for me. And now if it's a really high impact, report like this one where I'm getting like a 91% of the time it moves 50 pips, the average move is 80 pips, then that's one I'm more willing to go in on. And that's something I'm learning as a trader as I'm constantly trading these and constantly trying to grow myself is that, the higher the probability of that 50 pip breakout, the bigger the average move, then the more I'm willing to go to a strangle if I have to. Okay? And so if we go in and we look at the pound dollar, you'd go in and you just pull it up and you just basically go in and you put $100 right here on the spread scanner. And then you go in and put a 1-to-1 risk reward ratio and choose pound dollar, and it'd show you what's available. And then you could choose, whatever expiration you wanted. So you can go in and find one that, it's going to have obviously some movement required to make some profit, but see if you can find one within the, the risk reward model you want. If you can't find where you combine two of them together, if you can't find them where they're going to line up for you, they're going to work out the way that you want them to, then you go over and you go to a binary scanner. And it's real simple. You just choose pound dollar right there. Okay. And I'll go in and I'll actually say, all right, let's just simulate a range of up and down, 80 pips. And now if I'm doing the strangles on the binaries, those I'll actually usually do closer to expiration. I may hop in earlier, but I like to do them. I found that I go through those spreads earlier, like maybe 30, not expiration, but like 30 minutes before the news, but I'll do it. A strangle, sometimes I'll hop in like right before. And so I can go in this and I can say, okay, we got an 80 pips right there. What it'll do is it'll calculate that out for me. And then I can say I want both directions. And then I can filter it down to say like a 1-to-1 risk reward ratio at least. And it'll basically let me know if there is anything that adds up. So if not, then, we'll have to clear that out. But I need to reset a couple filters. I was like, what is going on? So let me reset this to that, to that, to that. And I can leave this all the way out here. So basically just normal settings, okay? So I hit reset filters, and then I go in and put my range in. And now I can see everything that lines up. Now I'm going to add the 1-to-1, because I had it on premium collection. And do that, and then now it'll get rid of anything that's not a 1-to-1. There may not be anything. So sometimes there's not anything on the 1-to-1. And so if nothing's there, notice how all the simulated range right here, it's $33 to make, the $27, $22 to make 22. I mean, we're barely there. So, just looking at the different prices, And you also got to give it time. It takes a little time for this thing to update, get all of its stats correct. And but once it gets them all in there and it updates, then you can basically take advantage of it. And let me see. I'm going to see if I can look at one other thing, because I know we're about to do a really cool upgrade, and I just want to see if this will show it. I may even check that during the commercial break. But we're making it where it's a lot faster. Okay? And when it's faster, it'll basically, because a lot of times you think the calculations are there, but they're still going and still going and still going. And so what you want to do is look at, let me see, I'll pull this up in here. And you want to basically look at, is it updating fast? And so what we're doing is we're going to make it where if you don't choose, and this is really cool, I'm excited about this. If you go in and you don't choose a spread or a binary or a contract or anything, it won't even be loading the data in the background, which means that it's going to be, a whole lot faster than it has been. And in the past, and it's not that it's slow, but I'm always trying to figure out how to, how do we make it better and better and better as we go through it. And we're doing that upgrade right now, I can see. So there we go. Okay, so we got that in. This will be the new version that's coming out and all the different little tools we're working on. So now I can go in here. I'm going to reset my filters again. And now I'm going to go in and do the simulator. And I'm going to say simulator range. Give me a range of 80 pips. So 0.080. Hit OK. And then I can go in and I can narrow it down. So see, notice how fast that was compared to before. It took actually quite a while. And if you'll take advantage of the scanner, it'll make life just a lot easier for you in doing these trades. All right, so and I'm just trying to see it. There is not a 1-to-1. That's amazing. Okay, so right there. There we go. So we get the 1-to-1s. We're not getting a 1-to-1 because of the movement that's already happened on the 2 o'clock. We're not getting a 1-to-1. And so I can go ahead. Let's go ahead and we can get rid of the 2 o'clock. Nothing lines up, right? It's going to expire in 41 minutes. So I can move this thing on down. Boom. Now, 2 o'clock's right on my way. Now I can see the potential 1-to-1s. I don't want these $2 ones. I mean, it's beautiful, as nice as that would be. The reality is, I mean, it's just, I'm not shooting for that. Okay. 51.35, up or down there, and 5313. I mean, could it move that high? Yeah, but probably not. So what I'll do is I'll go in and I'll say, well, make my minimum risk at least, say $4, or I may say $5, and because I want to get rid of all the peripheral prices. See, I got rid of all those spreads out there, and then I'll go, well, I need to make my risk because I don't want to risk say more than $45 on this trade. I'll make my risk $30 on each side at most. Now it gets even smaller. So I'll go through a few more examples of this when we get back from the break. Stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and we're just checking out a few things on the binary scanner for Nadex here, and looking at a couple things. I'm just trying to see if I had a gold trade I could possibly do. But there's really not anything showing up right now. All this crazy movement, you'd think we'd have some volatility to spike these things around. Closest thing we got is like a 1276. With the market at 1276.8. There we go. I was wondering if that was going to pop up. So that's the closest one we have on the screen at the moment. And what that would require is that gold stay above 1276 until expiration. So let's see here. We go in and we pull up a gold chart. Pretty simple. And there's a lot of different ways to do this. I try to look at the overall trend. I'll look at any kind of market noise. Sort of like the listening to the pits, but electronically. And then you go and you put the trade in. You place the order. It's pretty simple. But again, it has to expire below 1276. So we looking at buying right there, the 1276 binary. And you can go in and sort of plot your line on here. And the thing that's really important to remember, okay, really important to remember, is that in the last 2 minutes, there's no choices, okay? Like you're in the trade. So if you don't want to be in the trade, be out before the 2 minutes. Why would you want to be out of the trade? Okay? Well, there's 2 reasons. One, if it hits your strike of 1276, you want to be out of the trade. So that would be one reason, okay? That'd be the number one reason, because we're going in and we're buying for, say, $75, which means I am either going to make 25 or lose 75 if I hold this thing to expiration. Not a great risk-reward scenario, obviously. But if gold hits 1276, then, okay, I can get out for somewhere around, $50. I mean, I'm honestly going to say plus or minus 10, depending upon bid-ask spread and everything else. But if it hits 1276, I'd be able to get out for about $50. So if I can buy for 75, bring in 25, and, lose 25 if I lose, that's not a bad scenario. So that's a 1-to-1 risk reward. So I went from a, horrible risk reward where you'd take 3 profits to make back 1 loss, to a great risk reward scenario, where it's 1-to-1, and the probability is in my favor. Gold has to do nothing, and I make money. Gold moves up, and I'll make money. Gold moves down, and I'll make money so long as it doesn't move down too far or at least stay down. But in those last 2 minutes, if it's really close, okay, you may just want to get out of the trade. Now, if it hits your strike, get out. If it's like a couple ticks away, you don't want to play that game. Okay, just get out. Just take the $20 hit and make it back on the next trade. Now, something else you can do to get out early on this trade right here, so let me show you what I'm talking about, is you can go in and you can set a take profit order. So I bought for, say, 75. I could go in and I could say, get me out, and let's look at it, okay? So we can pull it up over here. We can go, okay, so we got gold. We got it on. We're looking at the 130 contract. I'm going to pull up the, there it is, right here. And you can set a, exit out of the trade at, say $94, $96, whatever. And so somebody may fill that trade for you. So if I go in to sell it, now if I do that, guess what's going to happen? Somebody may take that other side of the trade for me, okay? So if I go to sell, that's going to put in a ask at 94. And so that's something to always be aware of, when you're placing these trades, is it'll populate the other side if it's a better offer. So now, again, once you're in those last 2 minutes, you're in that, it is the 2-minute warning bell, because you're in unless someone decides to, for whatever reason, to take the other side of your trade. And that's pretty rare that someone's going to take the other side of that trade. But I love these trades. I got, no promises, guarantees, whatever. But I literally just got a text from Mike in Sitka. I went out there, hung out with him. He's one of the traders that I work with, and he owns the lodge up there in Alaska where we went fishing. And literally just sends me a text. Let me see. I'll read it right here. It's like, hey, you guys been eating a lot of fish, and then he goes, made 4% yesterday, made 7% on my account today. So doing this right here, what we're talking about right now, 4% on his account yesterday, 7% on his account today, just trading, expiration premium collection. And he's busy. He runs a business, okay, obviously. He doesn't have time to sit there for hours on end. He does this for 15 to 30 minutes, once or twice a day, maybe more if he can, but he's not sitting there for 4 hours in front of the chart, so it's pretty cool. Oh, anyways, we're about to expire right here. That's $250 in the pocket. Not bad for 5-10 minutes. All right, stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so that position settled on in the money, made $25 a contract. So not too shabby for a 5-minute trade from entry to expiration and settlement. When settlement happens, they send you an email right away. They do the payout right away of the risk plus the profit, or plus or minus, whatever, I guess. And so they put that money right back into your account, and then you're able to use it and move forward and use that capital again for your next trade. So pretty cool. All right, let's get back to our pound example. So I was going over here and reset all the filters, chose the pound, and remember we were going, okay, let's narrow this down a little bit. So we have a risk-reward ratio in here, but I said I want to get rid of the $4, risk trades, because there'll be like all these $2 ones, and it just takes up a lot of room on the screen, and I'm not going to trade them. And then, because they're so far out of the money, there's no reason to trade them. And then let's see, we're also going to go in. Probably one of the biggest mistakes I see people make. They're like, I'm going to do a whole lot of $5 trades. I'm like, you're going to lose a whole lot. It's like buying a call on Apple that's $100 out of the money. It's just, that expires in, 2 days. So probably not your best choice. Anyway, so we got pound dollar right there. And then I go, you know what? I'm going to straddle, or strangle. So I don't really want more than, say, $45 of risk on both sides combined. So, I can do 20 on one, 25 on the other, whatever. So I'm going to limit that down to $30. Okay. Well, now I can see immediately I don't have any choices right here on the 2 o'clock. And so I could go, let's get rid of the 2 o'clock. So 2 o'clock can expire in 23 minutes, so I can say 30 minutes. That'll drop that off the screen. And now here are my only possible choices that I can do. And I can go through and I can start looking at, hey, what's the payout on them? And check this out. This is actually a beautiful thing. This is a great example of why to use the scanner. Okay? And it's so good. The screenshot. All right, there we go. 13.50. But I'm going to go ahead and I'm going to bring this over here. And you actually see it on both sides. So that's pretty cool. So what am I talking about? Let's zoom in on this screenshot I just took so you can see what I'm talking about. All right, so right there, what I want you to look at is how both of these strikes cost $12.50. Okay? Now let's go over here and look at them. They both expire today at 3. But let's look at the strikes. Okay? One of them's a 5260. It's a daily, which means it started, like at 2 o'clock yesterday. One of them's an intraday, which means it started at 1 o'clock today. One of them is 7 pips higher, which means the pound dollar, for that to finish in the money, would actually have to move 7 more pips than the other one. They both have the exact same risk. They both have the exact same expiration time. But one of them is closer than the other. So you would definitely, in every possible scenario you can think of, you would want to buy the 5260. If you're going to buy one of these two, that is your definite choice. And then down here, we can see these, they're 50 cents difference. They're 3 pips apart. Well, every pip can make a massive difference. I'll give you, 50 cents if I can, have a strike 3 pips closer. This one is massive. 7 pips closer, exact same price. You don't always see that, but that's just massive to be able to actually see that difference. And that's something you would not notice. Okay, again, you would not notice that if you were simply trading inside the Nadex platform, because you're probably looking at intraday or daily. And by the time you switch back and forth between the two, then you would have, missed out on that. And I'll even see times where they'll be inverted. Like you'll see one for 11 and one for right now. Let's see if I can get it fast enough. I don't know if I'll be able to. But, see, it's going to change real quick. But you'll see them go back and forth. And, like I said, you can't always get it right there. But I'll see like $11 on the closer one and $11.50 more risk on the one that's further out. And that's not necessarily ARB because there's not enough difference on one side or the other. But what that is it just lets me know right away. It's like, wow, the obvious choice is the 5260. And to go back to the example of looking over at, Nadex, let me see if I can pull that screen up there for you. And we got that up here. Oh, one more second. I'm going to grab the other screen. And I don't know if this is showing up on live or not. But over here on demo, I'm just trying to grab this very fast so you can see it. If we go over here and we look at these ones that are expiring, again, pound dollar, the 3 o'clock expirations. Let's see if we have the same thing. So we got 3 p.m. right here. I got to refresh my list. There we go. Forex binaries, pound dollar, 3 p.m. And okay, so 11.50 on the 5267. Yeah, so we'll open that up, and then we'll go over here, and we'll go to the 3 o'clock dailies. Look at that, 5260. Little pricing mess up there. So, and look at the bid-ask spread, too. Look at that 5267. It has a wider bid-ask spread on top of that. So I literally just now noticed, I'm like, wow. Okay, so not only do you have a better trade, but you have a better bid-ask spread. Because the daily contracts are, obviously a little more liquid. So you're paying more money or you're paying the same amount of money for a lower probability trade and for a wider bid-ask spread if you chose the 5267. So So that's pretty crazy when you look at it and check it out. Anyway, so just something to, keep your eye on. Look at that, the 10, 15, 11 right there. We're actually seeing a better price on the 5260 than we are on the other one. And so this is where the scanner comes in, because unless you're like watching out for this stuff, which I mean it's pretty impossible to watch out for, then you're just not going to catch it. Okay, so I hope you are picking up what I'm trying to put down here, and this makes a big difference for you when you do this. So I want to capture this just bid-ask spread, how this is showing right now, and how it's cheaper, literally right now, doing the 5260. So we got a cheaper possibility for our trade. We have a higher probability. I'm not even saying that's a great trade to do. What I'm saying is, if I'm going to choose a trade, especially if I may choose that trade if I was doing like a straddle or a strangle. Okay, if I'm going to do that trade, I obviously want to do the one with the least amount of risk, and I want to do the one that is close as possible to where I'm going to be trading at. And I can see that right there. If I go in here, we can also reset the filter so you can see it on both sides. I'll put all the information on there. But that blows me away that I can actually get a better bid-ask spread and a better price or same price for a closer strike. And like I said, you'll never see it if you're inside the platform. So that's just one of the many values that the platform has whenever you're doing this. So there's a lot of things that you can do on it, and you can help out with the EPCs and everything else with the expiration premium collection trades that I'm always talking about on the show. But I mean that could be the difference you're winning your loss on a premium collection trade, right? So when I say premium collection, let's talk about that for a second. What I do is I go into the scanner, and you choose, live or demo, whatever. And then I'll go in and I'll choose my risk, and I'll put that at usually 65. And I'll put my margin over here at 95. And usually I have less than an hour to expiration on most of my premium collection trades, because I want time to be burning up. Okay, I'll get rid of any simulation information I have on here because I'm not really using that. So I'll get that out of the way, and then pick a direction. Okay, so we can pick whatever, whichever one we want to, and sometimes there'll be stuff, sometimes there won't. I mean, it just depends on how far the market moves, what's going on in the market, and if it'll affect our trade or not. But going down here. You see there's a lot of choices, so you want to narrow those choices down. That's why I say 65. By saying 65 minimum risk, I'm saying, it sounds funny, I don't want to risk less than 65 on my $100 maximum risk trade. I don't want to risk more than 95 because I want to get rid of the $5 ones because they're useless. I mean, by the time you pay for just fees alone, it's going to eat it up. And so we'll go in, and then always make sure your simulations are reset and everything else. And choose whatever currency you want to. We can go Aussie dollar, go to pound dollar, and when that narrows it down for you, then now you actually see your risk reward trades the way that you want to see them, the ones that are going to line up that you're looking for on the trades, and you can narrow it down to less time frame and everything else, and it'll make all of your trading a lot smoother. So again, I'm going to go over that one more time because I know some of y'all are using the scanners. You're trying to learn how to use it. 65 to 95. It's my minimum to maximum risk, and then drop down to, say, an hour to expiration, and then choose my market and see if there's anything that lines up for what I'm looking for. And just be careful in the simulator, because if you have anything in there, then it could actually filter everything out. Okay? So just doing reset may not do it for you. And so right there, I can see there's one trade that qualifies right now on the pound dollar. That expires in 14 minutes. It's a buy trade going in both directions. That's the only binary. Out of over 100 binaries available from my parameters, there's only one. Now there's two. Probably wouldn't want that one. But now there's two binaries that are available. And so if I find that, I want to go, okay, well, there is a binary available, so at least I know that at this point. And now let's go over and let's look at the pound dollar chart and go, is there a trade there? Because, I can look at all the charts and find trades, but then find no binary. So the scanner is a really fast way to see if there's anything that might be of interest to me. And if there is, then, like I said, then I'll go check out the charts. And I don't take the trade just because I like how it looks on the scanner. So it actually has to be a trade that I'd want to take. But the scanner lets me know, is there even a trade to take for the premium collection because they're one that's lining up. And like right now, I see the pound dollar sort of trending down at the moment, right? So would I really want to be in a trade going, saying it's going to stay up? Is that a wise choice going into the 2 o'clock expiration? Probably not. So I'd be looking for more for a short trade than a long trade. And so we'll go over here, see if we find anything. Actually, it looks like Eurodollar has a good one for us. So let's flip on over to Eurodollar. Got them in both directions. See what's lining up for us on the euro. And starting to get that little downtrend in the euro as well. I'm also getting some down ticks in the euro. So definitely be bearish on the euro. Probably wouldn't want to try to, you could butterfly, but geez, butterflies are nerve-wracking to say the least. So you may ask, what is a butterfly? It's the same thing as a premium collection trade, except for it's neutral. Basically, you're saying it'll stay below 31.40 and above 31.30 in the next, say 5 minutes. And so this would actually be a premium collection trade that you could do. And if you did the trade, there we go, right there. It has to stay between both. And I personally am not a big fan of the butterflies like in the last 15 minutes. I want to pick a direction. I tried the butterflies, and most of my losing trades on premium collection were when I was doing butterfly trades. So just keep that in mind. Now, we're at 31.36, and this is also something that's very important to be aware of when you're doing premium collection trades, is you need to be aware of where the mark price is. And they're using the Reuters FX data feed. Okay, so Reuters data feed. The mark price is what matters, not the bid, not the ask, not even the mark price on maybe your chart. Because maybe you're getting a gain data feed, or you're getting a FXCM data feed, or, who knows what broker you're getting it from. But the one thing about Forex is it's not exchange-based. Now, the spreads and the binaries are exchange-based, but they're taking the interbank data feed from Reuters, and so I like to look at this because it'll show me that market price. Now, maybe you want to look at a chart, right, on Forex. So if you're doing premium collection, the chart that you're probably going to want to look at, let's look at it over here. It's at the bottom, underlying indicative, currencies, spot rates, and then go over here to say euro dollar. I can click on the chart. It'll actually open it up, and now I have myself a euro dollar chart based on the Reuters data feed. And I could change this to, my standard 5 minutes, and I could add in an indicator. So like right here, I go into, let's see, I'm sure they have it, exponential moving average, there we go. So we'll turn that on. I'd added a few of them for me. I'm going to go back in and change that up. Let's go on back over to the moving average. Uncheck these two. Only want one of them. We're talking a 5 or 10 minute trade. We don't really need a whole lot of moving averages here. And then, so now that's done. And then I'm also probably going to want to change my settings to the mid, because that's how they base settlement. The mid price. And notice how my mid price will match what's in here. And on Forex, they actually show you the mid price in the ticket. So, a lot of cool things that you can learn, just little bitty tricks of putting things together. But that way you have the most accurate chart for doing these trades. All right, we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. All right, so I got the Nadex stuff up on the screen here, and let me make sure that it does render over there so you can see that, but I'm going through the chart settings if doing Forex charts. And so on the Nadex charts, then what you can do, I'll expand that out, is go in and choose like a time frame, such as 5 minutes, right there on the right side of the chart. And after you've chosen 5 minutes, then you can go in and you can go to indicators. And down here they have exponential moving average. You can click on that little pencil right there. And you can uncheck the other two. And then change that to a 5 for the exponential moving average. After you've done that, you can go over here to edit settings. And on your price, you can change it to mid. So that way you're actually able to get the mid price on the chart. And hopefully that'll help you get going. And because this is the price. Why do I put it to mid? I don't put it to mid for other things, but I put it to mid for Forex because on Forex what they do on settlement is they take the last 25 trades. Okay, or actually last 25 mid quotes, because bid and ask can really vary, right, on Forex. But hey, the last 25 mid quotes or mark or average, whatever we call it, the difference or the average between the bid and the ask. They get rid of the top 5 and the bottom 5, and they average the middle 15. All this in the Reuters data feed done in second, like a millisecond, whatever. And then that determines the actual settlement price. Well, on a binary, 1/10 of a pip can make a difference, because if you're in the money, you're in the money. If you're not, you're out. So when you're doing these premium collections, you want to look at the most accurate chart. Now, when you're trading, on a futures chart, you actually have to get a futures chart. You can't use Nadex for that. They do have like the master spreads which are close, but they're not it. When you're doing a futures chart, you want to use last, because they're actually doing the trades. So you want to make sure your chart is actually set to show last versus bid or ask on your futures chart. But on your forex chart, you want to show mid, and you want to use the Reuters data feed that they're using, so that way you're basing your decisions on accurate data. So I can go in here, and on my data series, I can choose, do I want like bid or ask or last? And so I choose last, most of the time, especially whenever I'm doing a futures trade, because I want to be able to see the last 24 trades. And anyway, so we got that right there. That's how that works. And then we're looking at 3141, 3143. So notice I'd see a difference right there. I'm looking at 3141 on this chart. I got 3143 over here because that's a bid versus a mid price. And it's also, I'm using the FXEN data feed on my charts through IQ feed versus, over here we're using the Reuters data feed through Nadex. And so if I put those together, I go, okay, well, I want it to expire below 3140. It's at 3141. Okay, well, that's not, I need a different strike because I'm not in the money. I'm not doing premium collection if I do that trade. So I'd have to go back over. I'd have to pull up the scanner and see if I can find, a trade that will line up that'll do, what I need it to do in order to be a good trade for me and line up for the requirements. So I can use the scanner. I can go in and I can look at let's see, we'll go ahead and we'll pull up the euro dollar right here. Narrow them down. And then I can focus just on that one pair and see is there anything that qualifies. And not yet, not right now. So we're in the last 2 minutes, so we've passed the premium collection time frame, but we have one every 2 hours that we can take advantage of. All right, well, I hope you all had a great day, and I'll see you tomorrow. Stay tuned for another great show coming up after this.